While you were distracted by your weekend, something else happened, not a speech, not a vote, an action. Late Saturday night, Donald Trump pulled the trigger. No tanks, no missiles, just paperwork. 8 European countries were targeted: Denmark, Norway, Sweden, France, Germany, the United Kingdom, the Netherlands, Finland. The reason? Fewer than 50 soldiers sent to Greenland. A symbolic move, a red line crossed. The punishment? 10% tariffs starting February 1st, escalating to 25% by June 1st. This wasn't about trade, this was a warning shot, because while politicians talked about solidarity, money started moving quietly, immediately. Within 72 hours, emergency meetings were called in Brussels. Antonio Costa convened EU leaders behind closed doors, no cameras, and then came the message from Truth Social. Trump said NATO failed, Denmark failed for 20 years. Now it is time, and it will be done. Not diplomacy, a countdown, because while you were enjoying your coffee, a geopolitical asset just went on the auction block, a territory sitting on rare earth minerals, oil reserves, and Arctic shipping lanes worth hundreds of billions of dollars. Ownership doesn't change with flags, it changes with contracts, and nobody is talking about what it actually means. This is not politics. Politics is theater. This is infrastructure. An operating system. It has been running for decades, silently, reliably, and every time you think an event is unprecedented, it's already step 2. The playbook has 4 stages, always the same, only the names change. Stage 1, isolation. You don't invade first. You suffocate, cut payment rails, disrupt shipping insurance, weaponize tariffs. In this case, 10% tariffs, then 25%, not to hurt governments, to pressure banks, to spook investors. Capital flees before soldiers move. Stage 2, demonization. You don't attack a country. You attack credibility, failure, weakness, unable to defend territory. Those words didn't come from journalists. They came from Donald Trump, then echoed by Scott Bessent. Europe projects weakness, the US projects strength. That's not rhetoric, that's narrative framing. Once framed as weak, coercion becomes stability. Stage 3, intervention, not boots on beaches. Legal intervention, emergency meetings, quiet executive orders, security justifications. Peace through strength, protection from Russia. Greenland is rebranded from territory to liability, and liabilities get managed. Stage 4, extraction. This is the part you never see on television, because extraction doesn't look violent. It looks like contracts, 99-year leases, mining concessions, energy exploration rights, signed by companies, not governments. Chevron, ExxonMobil, BlackRock-backed entities. By the time flags are debated, the assets are already priced in. This is why the clock matters, because once stage 4 begins, there is no rollback, no apology, no reversal. This is not theory. You've seen this movie before, twice, at full scale. First stop, Iraq, 2000, not 2003. That matters. That was the year Saddam Hussein made a decision. Quietly, deliberately, he announced Iraq would sell oil in euros, not US dollars. At the time, Iraq controlled over 112 billion barrels of proven oil reserves. Pricing that oil outside the dollar system wasn't symbolic, it was existential, because the petrodollar is not a theory, it is a load-bearing pillar. Break it, and the system bleeds. Stage 1 arrived first. Isolation, sanctions tightened, banking channels frozen, insurance on Iraqi tankers evaporated. Then stage 2, demonization, weapons of mass destruction, yellow cake, mobile labs. Names mattered less than repetition. Saddam became a caricature, a madman, a global threat. Evidence was optional. Narrative was mandatory. Then stage 3, intervention. March 2003. Shock and awe. Baghdad fell in 21 days. And notice the timing. Within weeks, the Iraqi oil system was restructured, not rebuilt, rewritten. Halliburton received no-bid contracts worth $7 billion. ExxonMobil, Chevron, BP entered negotiations. Oil was repriced back into US dollars. Stage 4, extraction. Not chaos, control, long-term production sharing agreements, foreign access to Iraqi fields. The war wasn't the objective. The reset was. Second stop, Libya. This one is cleaner, sharper, because Muammar Gaddafi didn't just challenge oil pricing, he challenged currency itself. By 2010, Libya held over 143 tons of gold and more than $70 billion in foreign reserves. Gaddafi's plan? A gold-backed African dinar, one currency, backed by metal, used to trade oil across Africa. No dollar, no euro. France noticed first. Internal emails later revealed Nicolas Sarkozy saw this as a threat to French financial influence in Africa. Stage 1 began. Isolation, Libyan assets frozen, foreign reserves locked. Overnight, Stage 2 followed immediately. Demonization, genocide, mass rape, imminent slaughter. Headlines ran faster than evidence. Hillary Clinton pushed the case at the UN. Responsibility to protect, humanitarian urgency. Stage 3 came next. Intervention, March 2011. NATO airstrikes. France, Britain, the United States. Libyan air defenses destroyed in 72 hours. Gaddafi was captured, then killed, on camera. Her reaction became infamous. We came, we saw, he died. Then silence. Stage 4 happened off-screen. Extraction. Libya's gold vanished. Those 143 tons never recovered. Oil contracts were renegotiated. Total Energy's ENI and US-backed firms gained access. The gold dinar died with Gaddafi. Libya collapsed permanently. But the resources kept flowing. That's the tell. Chaos for the population, continuity for extraction, every time, different decade, different villain, same 4 stages, isolation, demonization, intervention, extraction. Now look at the present, not the headlines, the signals, because the playbook never announces itself, it leaks. First signal, isolation. Tariffs don't target Greenland. They target European balance sheets. 10% in February, 25% by June. That window matters. It gives corporations time to reposition, time to hedge. Governments react slowly. Capital does not. Second signal, demonization. Listen to the language. Europe projects weakness. That line didn't come from a tabloid. It came from Scott Bessent, the man Wall Street calls the adult in the room. Weakness is not an insult, it's a justification. Because once weakness is established, coercion becomes protection. Third signal, intervention, no invasion, no vote, meetings, an emergency session in Brussels, another conversation in Davos, private, unrecorded. At the same time, national security language floods the zone. Russian threat, Arctic security, NATO failure. Greenland is no longer a territory, it's a risk profile, and risk profiles get managed. Now the fourth signal, the one nobody puts on TV, extraction. Watch the paperwork. Energy firms don't tweet, they file. Quiet amendments, licensing reviews, exploratory frameworks, when sanctions are reconsidered, when compliance rules are clarified. That's not diplomacy, that's access. Don't look for flags changing, look for 99-year leases. Don't listen for peace statements, track land use rights, mining corridors, Arctic shipping permits. Greenland is invaluable because of ice, It sits on rare earth deposits, potential offshore oil, and routes that cut Asia-Europe transit by 40%. Those numbers don't wait for elections. So when you hear de-escalation, ask one question: who is being allowed in? Because peace is announced loudly, extraction is signed quietly, and by the time the public debates sovereignty, the assets are already spoken for. Now bring it back to you, not ideology, not morality, your wallet, because geopolitics is never abstract. It just hides the invoice. Start with energy. If Venezuelan oil flows again, if Arctic routes open faster, fuel prices drop. You'll see it at the pump, station by station, a few cents less per gallon. You'll think you won, but look closer. Energy equities don't reward cheaper fuel. They reward control. When new supply enters the market, legacy producers take the hit first. Your energy ETF, your pension exposure, your safe dividend stocks, they don't collapse overnight, they bleed slowly. Trade wars don't raise prices evenly, they reshuffle winners. If Europe retaliates, tech procurement gets weaponized. Cloud contracts, defense software, AI infrastructure. If Europe doesn't retaliate, they concede leverage. Either way, volatility spikes, and volatility taxes the unprepared. Here's the part nobody explains. Extraction corridors don't benefit consumers. They benefit balance sheets tied to access. If Greenland opens mineral rights, rare earth prices stabilize. That sounds good until you realize the upside already belongs to BlackRock-managed funds, sovereign wealth partners, and early positioned energy majors. Retail investors arrive last, always. And when politicians promise peace, markets hear reallocation. Your savings don't disappear. They get diluted. Inflation doesn't come from printing alone. It comes from repricing assets you no longer control. So don't ask, is this good or bad? Ask something sharper. Which side of the corridor am I on? Because in this system, neutrality is exposure, and exposure becomes collateral. This is the part nobody likes, because it removes choice. The pattern doesn't care who you voted for. It doesn't care if you trust the media. It doesn't care if you believe any of this. It ran in Iraq. It ran in Libya. It is running now, with different names, cleaner language, better optics, but the same clock. Isolation, demonization, intervention, extraction. Once the sequence starts, it does not reverse, it only moves forward. Quietly, relentlessly. You won't be warned before stage 4 locks in. You'll hear about peace, you'll hear about stability. And by the time the word opportunity appears on television, the opportunity is already gone. Because this system doesn't need your understanding. It doesn't need your consent. It doesn't need your belief. The pattern doesn't care if you believe in it. It doesn't need your permission. It just unfolds, and the only question left is whether you recognize it before you become part of the cost. Subscribe if you don't want to become collateral damage in the next stage.